The June CPI report came in this morning, and the Federal Reserve's steps to cool inflation seem to be working. Inflation rose at the slowest rate since March 2021, with the core month-over-month figure rising by 0.2%. So, is this the light at the end of the tunnel that we've been waiting for? Let's bring in White House Council of Economic Advisors Chair Jared Bernstein. Jared, good to speak with you here on today. Is this the light at the end of the tunnel from your perspective, and how is this being discussed within the walls of the White House?
Well, I think the important thing in that regard is that we've had 12 months in a row of slowing inflation or disinflation. Here at the Council of Economic Advisors, we're very careful not to over-torque on 1 month results, whether they go up or down. But when you have a trend like the one you're showing in that figure, that's a pretty reliable pattern. And so the fact that we're now at 3%, that's 2/3 down from inflation's peak a year ago. The fact that we saw the core rate, which is still quite elevated, the fact that we saw the core rate come down 0.5%, that's also welcome news in this regard. So in both those cases, we have kind of the trend is your friend dynamic playing out. That's favorable to American workers, and it's very consistent with a key goal of Bidenomics, which is to provide families with some real breathing room.
Well, and on that front, Jared, hey, it's Julie here. It's great to see you. We know what's been happening on the monetary front, right? What the Federal Reserve has been doing to try to bring down inflation. What can the White House point to specifically that has helped the inflation picture for Americans at this point?
Yeah, that's a great point, because I think if you consider two factors going on in the economy, which I think you were just talking about, the question is nicely answered. We're seeing something that's kind of unusual in the current economy: sharply declining inflation. That is, inflation down 2/3 on a year-over-year basis over the past year. If I were talking to a year ago, we'd be talking about a print that was north of 9%. Today, we're talking about a print that's at 3%. At the same time that unemployment has been below 4% for that whole period. And in fact, we've seen a higher share of working age Americans in the workforce, in jobs now, than in 20 years. So we have slower inflation amidst strong labor market demand. That implies that some improvements, important improvements, have been made on the supply side, unsnarling supply chains. We also see that if we look at goods inflation, which has been softening for a while now, and I think came in flat in June. What was the White House role there? Well, ever since the president took office, he quickly recognized the importance of unsnarling supply chains. And we stood up something called the Supply Chain Disruption Task Force. We got to work at the ports on the West Coast. This is all stuff that took place a while ago. But I think that unsnarling of supply chains, which does have Joe Biden's fingerprints on it, in tandem, very much so with the work of the private sector, is playing out in this and some of the prior reports.
We've continued to have discussions with some economists who have kind of pointed towards a period of profit-led inflation that certainly is something the White House has been looking at across where corporations are netting out profits. And even over this time, how are you continuing to engage companies, have conversations, knowing that the consumers are still trying to make sure that their paychecks hold up to higher prices, while at the same time knowing that corporations have a job in this too?
Well, the third tier of Bidenomics. So Bidenomics has three tiers. One is smart public investment to pull in private investment. We see that in play. The second is empowering workers through a tight job market and worker training. That's also in play, part of the CHIPS Act. The third is promoting more competition, both to lower prices and to give small businesses a fair shake. So bringing down some of the anti-competitive barriers that have grown up over the past few decades is an important component of this. And at the end of the day, that should help put some downward pressure on margins, especially when industries are anti-competitive. That involves everything from getting rid of junk fees, from taking down overdraft fees, which the president has done through administrative rule changes. That, by the way, saves families over $5 billion a year. And of course, it includes the role of the independent FTC, which is, I think, working aggressively to restore fair competition to our corporate sector. So I think all of those play a role. I do think that when the job market remains as tight as it's been, workers have more bargaining power. And one of the things we really like in today's numbers is we're seeing, as inflation's been coming down, wages have been going up. So we now have real wage gains to the tune of 1.6% over the past year for middle wage workers. That's really an important improvement in their buying power.
Yeah, definitely. That is good news for people. So when all is said and done, what do you think are the current odds that the U.S. economy will avoid a recession? And if not avoid it, that it could be mild?
Well, because of where I sit here at the White House, and I'm not a talking head at a market shop or something, we don't get into those kinds of probabilities. I do certainly track all the market shops, and I think many of them have rejiggered those probabilities to a more of a soft landing scenario. What I would say is the following. I found it very useful here, especially here at CEA, where we advise the president and the senior staff on the economy, to explain things that we can see in real time. And here, the indicators are just flashing steady, stable growth. If you look at the job market, if you look at consumer spending, if you look at this trend in inflation that we've been discussing, 12 months of decelerating yearly inflation, some real wage gains, which, by the way, will come in and help support consumers broadly. That's, by the way, important as some of the excess savings in the systems burn off. So I think if you look at the indicators as they stand, you'll see numbers that are consistent with a growing economy. And in fact, that is what the GDP numbers themselves show. So in that sense, I very much like where we are.
White House Council of Economic Advisors Chair Jared Bernstein. Jared, thanks for the time.